Welcome back and welcome to Forex Minions. Hopefully all of students have joined this webinar, and today in this English webinar we are going to discuss about the best Forex strategy, the strategy which is being used by the Forex Minion student, and this strategy is based on MSS, which is known as market structure shift. Let's start this webinar and discuss this strategy in complete details.
And this is the setup that we have discussed with my students about 2 weeks ago. We was highlighting this area as a strong buy zone for the GBP USD. So the first movement is start. Now again a pullback on NFP news, then market will start to continue. The question is asked by the Nawaji Nobi Frank is that how I can do scalping. First of all, we have studied this strategy, how to do scalping. I have shared this lecture on YouTube and with all of you guys. But if you have not seen that lecture or video, let me start with just a simple schematic diagram. For example, market is bullish, something like that. Give me a second. Okay. For example, market is bullish, okay, and we would like to sell, or we would like to buy. And for the time being, you are asking about the scalping. Let me tell you how to find a scalping setup. Just first, you need to find the trend, okay. For the at least you must find the trend on H4. Let me type some points here. Okay, what does it mean by secondary trend? The first trend, the major trend, let me type it for you. So this is the first thing we need to do. Okay, the trend is bullish, for example. Then what we would like to find, okay, and give me a second, let me draw it properly so that you can guys understand it really well. Okay, so this is a simple schematic diagram and trend is bullish. Trend is bullish. Here market is just taking out the inducement. Okay, inducement, market taken out inducement, market taken out inducement. Okay, whenever market will take out inducement, this will be our breakout structure. And if candle will close below, then we will mark it as a swing high. This is also a breakout structure. Now, when the trend is bullish, we need to mark the breakout structure and swing highs and swing lows. Now, what we will do, when market will start a pullback, okay, when market will start a pullback, then what we need to find? Just a simple schematic diagram for the explanation. For example, this pullback is started, market started, went down, and when market takes first pullback, then again take out this low and then expand it. This move must be expansion. I will mention that later on. Then inducement, then on the reversal, we will catch the move. Okay, so this is schematic diagram. Now what is this? When market will come down, market will create this first support level. What is this? This is just a retail support. So this is just a retail support. Now what will market do? When market will give a bounce on at this point, the retail trader will start to buy. When retail trader will start to buy, what will happen here? Market will just build the liquidity on this side. Okay, market will build the liquidity below this low. Why? When people will start to buy this level, they will buy it. They will execute orders. Their stop loss will be something like here. Then market will give a minor bounce just to show the retail traders that market is going to start. But suddenly market will drop again and stop on their stop losses. Then what will happen here? Market will just sweep out their stop losses. which I have marked with the X. Okay, market came down, created a minor support, again dipped down, collected all the stop losses, which is counted as a liquidity. So what happened there? Market just grab the liquidity or sweep the liquidity. Liquidity grab or sweep. You can call it anything, whichever you want. Okay, retail spot, market moved up, then market came down, grabbed the liquidity and moved higher. When market will start moving high from this low to this point, so this move must be an expansion. This move must be an expansion. This one. Okay, let me mention it here. Okay, give me a second. This move must be expansion. Okay. Now, what does expansion mean? Expansion doesn't mean market just take out this high. Expansion mean when market will take out this stop losses, market grab this liquidity, and then market expanded high. This expansion must have a fair value gap or liquidity void inside it. Something like that. Okay, something like that. Now, this expansion, when market expanded, this swing must have a fair value gap. When market have fair value gap, only then this setup will be highly probability. Now, market will came back, again move higher. For what reason? Because market just created an inducement level to induce the buyers again. Sorry, inducement level. So at this point, market came back and induced the buyers for the early buying. Then again, what happened here? Market again built the liquidity here at this point. So actually inducement build the internal liquidity. Okay. So this is first liquidity which is created by the inducement, and this is second liquidity which is provided by the fair value gap, because fair value gap also provide an internal liquidity. Okay. So what? When market came down, take the inducement and moved higher. Now this is our high probability setup. Whenever we will see market in this zone, let me highlight for you. Whenever you find this thing in the market, a retail spot, liquidity grab, expansion with fair value gap and an inducement level, then just simply wait for the market to come back your fair value gap and you can trade it. Okay, so this setup is high probability setup. I never traded anything beyond this level, anything apart from this strategy. This is the most traded strategy by me. Okay, that I have shared with you, that I have shared with many of students. Okay, so what? Now market just created this inducement. When market will come back at this point in this fair value gap zone, then we can buy. Okay, now just for the additional confirmation, guys, you are sending me text messages. Just give me a moment. Let me finish this point. Then I will take your questions. Okay. So we always need to find this phase in the market. This phase. Expand lower side retail spot. Again, early buying, liquidity grab, and expansion with fair value gap. Secondly, an inducement level creation. Whenever we see market in this gray area, then we will expect this one. Then we will wait for the market just to come back and take our orders. So basically, we have to find this phase in the market for the bullish trend, and we need to wait this for the green zone. Hope you can understand this point. We have to find this gray area in the market, and we have to wait for the green movement in our POI zone. Okay, now second thing, when market will come back into our fair value gap, something like this. When market will come back into our fair value gap zone, then Again, on the 1 minute time frame, what we will do, we will find a minor structure shift on that lower time frame. Something like this again. At this point in this circle, when market will hit your PY zone, we will find the setup again. We will wait for just a minor liquidity sweep. Okay. Then an expansion with fair value gap. With when market will expand with the fair value gap, then this point, this high will known as MSS, which is also known as market structure shift. Let me type here for you. Market structure shift. Okay. So what are the rules for the market structure shift? First, market came back, create a temporary retrail spot. Market just sweep the liquidity, then expand with the fair value gap and the candle closing above this point. Candle must close above this point. Let me mention for you. Okay. So when market sweep the liquidity, expanded with the fair value gap and candle closed above this high, then we will mark it as MSS, market structure shift. If candle will just close, just pass this high with the wick, then I will not consider it a high probability zone. Okay. Candle must close above this high, this middle high. What is middle high? The lowest point which created the retail spot and the swing which came back to take the liquidity grab to sweep the liquidity, that high from which the point reverted down, that high will be marked as the MSS, which is also known as market structure shift. Now, similarly, same rule we will apply here in this circle. When market sweep the liquidity and closed above the middle high, which is also known as MSS, okay, MSS, then a minor inducement will be beneficial for us. Okay, now we can buy here. If we observe this pattern as at this zone, if we observe this pattern at this zone, okay, this circle, we observe this pattern again in our PY, then we can buy. Now, what we have to do by just place your stop loss below this low. Okay, for example, you are going to buy at this point, just move your stop loss 5 pips below this low. Okay, and buy for this high, this one. We will buy here. We will buy here. Okay, and we will take our profit at this point. Okay, so this setup will easily provide you 1:4, 1:3, 1:5 ratios. Okay, hope you have understand this point, how to do scalping. This is the most traded, most successful strategy that I have used and I am still using. Okay. No, this is not ABCD pattern. Okay. I do not use Elliott Wave. This is very simple strategy. Only 4 to 5 rules. Count on your fingertips. Whenever you find a setup on your fingertips, just trade it. I am talking to Ibrahim. Okay. Hope you have understood. Hope you have listened to me. Not necessary on H1, any time frame. It depends on you. For the scalping purpose, I have mentioned the minor trend for H1 and major trend on H4. I will mention other rules on the left side shortly. Okay, Asad, I will answer you later. Give me a second, okay? Because this webinar is going to be purely for the English people. But for the time being, if you have asked me this question, so when market is in the bullish trend and you want to sell, then you must wait for the sweep-based change of character or swing-based change of character. on the shorter time frame to take this trade to the high time frame PY zone. What's its win rate? Actually, you have to find it by yourself. If I will say that this is 75%, 80%, 85% successful, you are not going to believe. Just go to your charts, trade in the direction trend, find your trades in the direction of trend, then you will figure out what is the success rate. Now, if the market has two fair value gaps which we need to trade, we will need to trade the fair value gap which is closer to our order block or which is closer to our liquidity sweep area. Okay, for example, if we had two fair value gaps, something like this one, and this one. Now, what we need to do? This fair value gap is most closer to the liquidity sweep, liquidity grab area. We will use this fair value gap. I mostly use the fair value gap which is closer to this zone. So any question, Frank, Guy, and other English peoples, if you have any question, drop me here. Guy, if you have any question.
No, I don't have any question yet.
Kulvinder Singh, every pair is best for ICT unless you are going to backtest it. Without backtesting, no pair is best for ICT, no pair is best for you, no pair is best for anyone. No. So we have studied this whole schematic diagram. We have studied this whole schematic diagram for the buy trend side. Okay, bullish trend. So what are the rules? We have to find the major trend on H4 and minor H1. Okay. Now what we need to do, give me a second. Let me type the following rules for you so that now if you watch this schematic diagram, what we need to do? Simple. First, we need to look for the liquidity grab. Okay, liquidity grab is the first thing we need to find. Second, when market take out the liquidity, then we need the expansion. Expansion with FVG or liquidity wide. Let me type price imbalance because most of African people call it as a price imbalance. Okay. First of all, liquidity sweep, then market must have a strong expansion with fair value gap imbalance. Third thing, candle body must close above this middle high. Okay, this is third rule. What is fourth rule? Wait for inducement. Okay, fourth rule. And fifth, trade in your POI. Simple as that. Nothing else. You have to find these four rules, apply them, and trade them easily. Just go to your charts, backtest this strategy, these points, and you will find a lot of strong setups on your trading platform, or you can say that in your trading style, there will be a lot of improvement in your trading styles. So this was for the bullish trend. Now, if we start to talk for the bearish trend, simply I will invert the scale. And now you can see that there is nothing different. There is nothing different for the bearish setup. Okay, market is bearish, creating break-off structures, taking inducement and going higher. And when market will take out this pullback, when market will start this pullback, and you have a POI zone here, something like this. Okay, something like this. You have a POI zone here, and this is our higher time frame inducement. This is your higher time frame inducement, and this is your POI zone. And then market will approach to this POI zone, something like this. Okay, and this is our higher time frame POI zone. Okay, so this is This one is your higher time frame, something like this. This one. So this is your PI zone, which is almost here, and price is approaching to this level above this inducement point. When market will approach your PI zone in the high time frame, then you will look for this setup on low time frame in this PI zone, and then you can enter your trade. Okay, so these rules are simply applicable for bullish and bearish trend, 100% same. You have to change nothing. Now, how we the point is how to find, or you can say that which time frame we need to use. I personally do not recommend to go to M1 time frame, but people are using M1 time frame, which is best for them, which is not best for me. For them, they can use it. I mostly recommend M5 time frame for the entry confirmation. So these are the rules. Nothing change. Simply go to your trading platform, apply them, and happy trading.
Well, if you have any question related to this strategy, related to this lecture, or any question related to Forex trading, you can contact us on this email ID. Until next lecture, wish you good luck and happy trading.